Hi, thank you for joining. My name is Mike Mills, and I'm the managing partner and co-founder of the Legacy Advisor Group. Today is Monday, May 4th, before the market opens. The best way to summarize what we've seen these past few months is that the market continues higher in hopes of an end to the Iran conflict and high oil prices, and despite it. This month, I'm going to keep it light, as one of my partners, Ken Jones, will also have a video in the newsletter to discuss the new Trump accounts. The best way to summarize April 2026 was that it was a strong risk-on month for markets and provided the strongest returns for the month of April since 2020, reinforcing a recovery that carried into the second quarter. U.S. equities rallied sharply, led by growth stocks. The S&P 500 gained about 10% in April, putting it roughly up 4 to 6% year to date. This reflects renewed confidence following the March correction. The NASDAQ composite surged approximately 19 to 20% in April and moved about 5 to 7% higher year to date, significantly outperforming broader markets as mega cap technology and AI-related stocks regained their leadership. International and developed equities also performed well, with the MSCI AIF up about 7% in April and roughly 4 to 5% year to date, supported by improving global growth expectations and relatively strong performance in Europe and Japan. Fixed income, however, lagged equities, with the 10-year U.S. Treasury delivering only a modest positive return in April and remaining roughly flat to slightly positive year to date, as higher yields offset price appreciation and returns were driven primarily by coupon income or clipping the coupon rather than capital gains. From a sector perspective, communication services, IT or information technology, and consumer discretionary were the top performing S&P 500 sectors in April, benefiting mostly from the shift back toward growth assets. In contrast, however, energy was the weakest sector, giving back earlier year-to-date gains as oil prices slightly retreated, while utilities and real estate also lagged amid rising risk appetite. Overall, though, April reinforced a rotation toward growth and risk assets, with equities, particularly U.S. growth stocks, firmly leading returns both for the month and year-to-date through the end of April 2026. From a portfolio side of the equation, we rebalanced just about 2 months ago and do not currently have any changes planned to implement now. We do continue to satellite alternatives like private debt, private equity, and real estate, or areas like infrastructure, other alternatives like structured notes, to allow us to bring down correlation of public market volatility and ultimately subdue that volatility in our portfolios and add to returns. Before I wrap up this week, though, there was very interesting news this week as Jay Powell, our Fed chair, isn't just walking out the door when his time as Fed chair ends. Instead, he's sticking around as a Fed governor until his term ends in 2028. I mention this because this is unique. This rarely happens. Even as Kevin Warsh, who's just confirmed is stepping in as the new chair, Powell says he feels compelled to stay because of ongoing legal and political pressure on the Fed, and he wants to help steady the institution while that plays out. Though he's made clear he won't try to run things from the sidelines. Warsh, meanwhile, will be fully in charge once he takes over, assuming he's confirmed, setting policy, leading meetings, and owning the Fed's decisions. But Powell's continued presence means this is more of a handoff than a clean break, signaling continuity at a moment when the Fed is under a lot of scrutiny. As I mentioned, this month will be short, and that really does it for the news this month. I will add that many of you have family members about to graduate from high school and or college as we're in graduation season, and I want to say congratulations to all of them. My own 18-year-old son, TJ, is graduating from high school, and I couldn't be prouder of the young man he is and continues to be. In just a few short months, he will begin his college journey and will be one of the drummers for the Liberty University Worship Collective, and I'm so proud of him. As we wrap up this month, on behalf of the team here at the Legacy Advisor Group, we want to thank you for taking time to watch this month's video. If you have a family member or friend that can benefit from our in-depth financial and tax planning, please feel free to send our contact information. As always, thank you. Have a great day.